GKFX Prime presents the Market Analysis Webinar. Hello everybody, welcome to another edition of the weekly webinar. I hope you're all well and happy, especially in these rather unusual and challenging times. We're going to run through the major asset classes offered on the platform today. We have currency pairs, we have commodities, and we have the stock market. Of course, if there are any extra markets you'd like us to cover, please drop us a comment on the video. Any of the questions that you had, would love to hear from it. And of course, if you are getting some benefit from these, don't forget to click that like button if it's available where you're watching this. So I'm going to start with the euro-dollar currency pair. It's obviously the front and center of the FX market. So the trend is really not too clear in the euro chart. You can see this is on a weekly candlestick chart that the 112 level was the resistance. We had a false break, we've come right down. 108 was the support. We had a false break, we came right back up. So we're in no man's land at the moment. So taking our cues from the shorter term price charts, this was the course of action. We recovered off the lows, put in a head and shoulders pattern with this as the neckline. We've turned lower. We've pretty much reached the target of that head and shoulders pattern. We've come into lows just beneath 108. And you can see this was the, if you like, the neckline of where we broke higher after putting in a base. We've come just down to that. We got a little bounce, we dropped below it, hit 107.50, 770. We're consolidating. We've also hit the 30 level on the 4-hour RSI. Now there is some evidence that the trend seems to be shifting on the 4-hour RSI, shifting back to the top side, and it does look very much like we could get, oh, I've deleted my line through there, but it looks like we could get a little pop up to the top side, but this trend to me still looks bearish. We're below the 50-period moving average on the 4-hour chart, and indeed prices are still generally making lower lows, lower highs, characteristic of a downtrend. And even if we were to get a one higher high, that's not enough to make it an uptrend all of a sudden. That's what we really want to see for the trend to reverse is for a higher high and a higher low, and then a second higher high and a second higher low. That is our confirmation that it's not just a pullback, but in fact the trend has reversed. We're not getting that yet. So for the time being, no particular reason to think that this level down here should be some sort of significant support, and looking for prices to perhaps bounce. There might be an opportunity here for bouncing off oversold levels up to the 109 level, and then there as previous support, that potentially, especially going into that moving average, is potentially an area where the price could indeed roll over again. If it doesn't, if we do get a breakthrough 109, then things are starting to look a lot more positive. We may even get a break above the moving average again. Then what we'll be looking at is a surge, a decent deep pullback, but then the trend continuing again, and potentially a move up to challenge that 112 area that we've highlighted in orange, which was the kind of important breakout level. And again, that opens up new possibilities to the top side if we get back through 112. Let's switch gears to the British pound, and so this is our weekly chart again, and a slightly odd downward sloping trend line through the lows that seems to be somewhat working. As a reminder, 115 are multi-year lows. We had a massive snapback off the 115s the week before last. Last week was just a modest pullback, and so that to me looks quite bullish. We had that big sharp snapback, but what we gave back from that bullish move was only slightly small, and so it looks more like a pullback at the moment. Doesn't look like heavy sellers coming into the market. And if we look down at our 4-hour chart, there's our big snap higher that break out of this basing area, basically a double bottom of some sorts, pushed up, basically found resistance at the 125 handle, and we're consolidating in what looks like a continuation pattern. Now we have taken out this little low through here. If we were using the closing prices, you can see that maybe that is the top of the range that we're dealing with at the moment. Depends how you like to do these things. It's obviously it's a combination of highs and lows and openings and closes that markets will pay attention to. Obviously, if you're just looking at a line chart, all you're seeing is these closing prices. So closing prices certainly do matter. But however you're spinning this, we're obviously in a generally horizontal range. Oh, for some reason I can't. There we go. And so something along these lines. This is the horizontal range we're looking at. But we didn't get to oversold. And it looks like actually we're getting a little false break through this low. And if I zoom in on this candle a little bit, this candle here looks like a retest of the lows and a successful test, a false break, and it's now pushing to the top side. So if we get some confirmation with a move through these highs, that actually looks pretty reasonably bullish for a challenge up to 125 again, and then perhaps beyond. And indeed, if we do get beyond 125, then I think we start looking towards challenging these prior lows over here. If I zoom out a little bit, you can see the kind of the context of what we're dealing with here. And where does that come in? About 127.50 if memory serves. 127.20. So if you're being more conservative, before we get into that low, 127 a possibility on the top side if we get through 125s. But for the moment, market's still holding up in a kind of bullish pattern. And so for the moment, we're getting a mixed picture from the dollar, from both the euro and the pound. Looks like it'll be a short-term movement to the top side. The euro looks more like it would roll over following that. The pound looks more like it would push higher following any upside move. So some opportunities either way on the dollar, which is always helpful. Let's have a look at dollar yen. So what we're getting here, I think, is we had this consolidation move. We popped up through 109, but at the moment it's looking like a false break through 109. And I think if we're this move at the moment is telling us that we're actually looking at a little false move higher. If we get a rebound off these old highs and push through to this top side again, that to me looks bullish, and we're going to move up and challenge these highs at 111 to 111.50. But at the moment, it's looking like a move lower. So a move lower in the dollar in the case of the dollar yen. And that would, if we do get a move back into the trading range, would suggest a retest of the bottom of the trading range, and potentially a break to the downside. And if we get through 107, then I think we start thinking about 105 again, which is pretty much where we had this the move higher, the pullback, the break, the retest was all in the vicinity of 105. For our mind ourselves of the bigger picture, it's pretty choppy on dollar yen, no discernible trend. So we're just following short-term cues at the moment and trading in both directions. So a move lower, a consolidation, potentially a bottoming pattern, potentially a double bottom. But if we move back through the neckline, more of a possibility of a failed pattern, which actually could be always quite solid patterns. If you have a double bottom pattern, obviously it's a great pattern if it does actually call the bottom. But if you have a break through the neckline and it proves to be a false break, moves back down into the pattern, that actually can be a very decisive move signal in itself. That's a bearish one. And so a failed double bottom is a very good bearish signal, is what I'm trying to say. So potentially what we're dealing with at the moment, and so a Q to drop to 107 and 105 below that. Let's switch gears to the Aussie. So similar story in terms of what we saw in the pound and the euro, obviously. Big strong dollar move, weakness in the Aussie, and the Aussie was particularly weak, and the snapback hasn't been as strong. But nonetheless, we did make a series of higher highs. We stalled out at 62, and we've had just a modest pullback from 62. And this actually looks more constructive if out of any of the pairs. Hit 62, but no obvious major selling pressure, maybe apart from this candlestick pattern here. You can see this was the previous peak. We had a false break to the downside, pushed up to the 62, held as support numerous times. Then it got a little bit more choppy. It looked like a more decisive move to the downside, didn't pull it off. Now we're back above it again. So this has been quite a good pivotal level, and we're back above it at the moment. We're above the, I believe that's a 20-period moving average I've got on the chart here, and the RSI has got a slightly cleaner looking trend line, which we've broken to the top side of. So looking like a potential retest of 62, and if we get back through 62 again after these three tests, I think we can get up to 63 pretty quickly, which happens to be this spike low over here. And above that, and we're looking a lot more constructive, and up to 64.50, which these prior range lows over here. I could zoom out a bit. You can see what we're contending with. Bit early to start talking about 67s, which was the big breakdown area where the Aussie really fell off a cliff. But the general scheme of things, I think, is that we obviously had a big move lower. Things still quite bearish in a bigger picture, but it looks like that maybe this recovery off the lows has still got a bit of legs in it. We could be looking at an A, and a B, and a C, that kind of thing. Okay, last of our currency pairs here. We'll start with the weekly chart. The 137 level is our big line in the sand, and you'll see why in a minute. It looks like we actually are potentially moving down for a retest of that 137s. 147 is our big topside level. We never quite touched, but we got close. If I zoom out a bit and remind you, that was our previous peak from back in 2015. We've had a very successful retest of that level. We've turned right back lower, and indeed it could look like we're heading 1,000 pips lower from there for a retest of 137 if this dollar weakness can continue, as particularly in terms of the CAD. And here's the picture. We took out this low here. We've pushed up to the top side, but 143.50 proved to be the top of the range. Let me zoom in a bit. Since then, we've rolled over. We've hit 140. 140 has been support a couple of times, and now we're in a much more tight consolidation. But looking like a further rollover to the downside is possible, because 140 you would expect some some really big demand coming in there, but 143 weren't able to get through 140 admittedly, but we don't truly know which way the downside break is coming. My slight tendency is to think that it's is going to be a downside break to retest that big level 137 level. It seems to be where we're headed, but maybe just one more drop below 140 and that's enough for us to decide that we're pushing higher. Seems like something a bit more. It seems like 140 wasn't quite enough, and people looking for lower prices before getting into the CAD again, for the dollar versus the CAD, looks like. Okay, now going to talk about a bit more about commodities. So gold coming up. This is our weekly candlestick chart, and so generally a pretty of late pretty bullish structure, right? The shorter term moving average easily above the longer term moving average. We've had a couple of little moves below the moving average, but we've snapped back again. So here was the first instance, and we're in the midst of the second instance now. And we're now, having had that big weekly decline over the course of a couple of weeks, we're now pretty close to those 7-year highs, if you remember, near 1700. So if we drop down to our shorter term chart, you see the 1640 level have been quite interesting. That was where we saw the big breakdown from. We put in this bottoming pattern, rallied up, hit for 1640 a couple of times, but just weren't able to make any kind of meaningful downside. This is the line we had in last week, if you remember. Retested from the underside, but weren't able to, what you'd expect in a kind of bearish move would obviously be something like a retest and a move lower from here, but we didn't get it. We moved back above, and subsequently we've moved back above here. So it's all looking, the structure is all looking quite bullish at the moment on the short term. And excuse me, getting a pullback from this this little intermediate peak over here around 1670 provides potentially an opportunity for the price to pull back somewhere in towards 1640 for this price trend to continue up to 1700 again. Should 1614 give way, still reasonably bullish structure. Could look to this little small breakout area through here as potentially another interim support for the price to then move higher from. Bearing in mind that we are well overbought, so if we do come out of that overbought territory, that obviously from an indicator basis is a sell signal. So it looks like something like this. You come out of the overbought territory, you expect a bit of a deeper correction. Obviously last time it happened over here, you get a kind of short correction first, get another attempt up, and then the bigger move lower. So just because we come out of it once doesn't mean that we're altogether bearish on the market, but expecting a slightly bigger pullback, maybe down to this little area down here, then for a further challenge to the top side. But ultimately, we're as I would say, breaking above old highs, holding the old lows. That's a bullish situation where you generally want to be a buyer. Let's move into the crude oil market, which has been pretty crazy of late. But this is our weekly chart and a nice bearish reversal pattern here. 3-candle bearish pattern. It's not always clean on futures markets, but because they're typically 24 hours in operation, so not quite as obvious sometimes as big stock market reversals, but this is something along the lines of a morning star pattern, look a bit like this one. Big move lower, there's something like a doji pattern in the middle, and then a push to the top side. You see this is like the evening star pattern over here, big bullish pattern, reversal, and then the following bearish candle triggering generally quite decent moves. So we're looking at something like that at the moment. My tendency is to think that probably we've got pretty overdone in the bearish action in oil. Fundamental context is it looks like probably OPEC will come to some sort of agreement at a meeting on Thursday, so watch out for Thursday in terms of oil prices. This week's really all positioning ahead of that. We might get some rumors coming out beforehand that are deals in the works, but we're talking about $10 million, 10 million barrels worth of oil being taken out of production. Caveat to that is that there are some estimates that we've probably lost 35 million barrels worth of oil in demand because of all the lockdowns. So still a deal being done, OPEC back in the picture would be positive for oil, we think. And so we've moved above this previous areas of resistance. We took out this resistance, pulled back, took out this resistance, pulled back. It's quite typical what you want to see of an uptrend. This, if you remember, I think it was last week or even the week before, we pointed out this bullish divergence. It's working out quite nicely for the time being, and just it seems naturally that we want to get up to 35. If we're looking at a push beyond 30, 35, which is the beginning of this gap over here, you've got these two peaks either side, but 35 is really the target. And then on the other side of the gap, we've got 40. So we've got very oversold in oil. If we get back up to the big gap again, with 35, we'll get to the top of it. We're north of 40. So certainly some potential opportunity to the top side in oil here. But let's see what happens with this OPEC meeting. It could all come to nothing, in which case we'd expect the action to turn bearish again. For the moment, it looks quite bullish. Short-term little flag pattern. Looks like we could get a breakout through the 30 level. And last but not least, let's just have a look at stock market. It's just got the one stock market in here. If there is some other regional stock market you'd want me to look at, please let me know. But obviously this is the global benchmark, the S&P 500. Obviously fell off a cliff on a weekly basis. We've talked in the past about these long-term support levels. I'm not going to go into too heavily about that again. We're not worrying about those long-term supports for now. It actually looks quite constructive. Here we've taken out the previous resistance. We moved higher, managed to hold on to the short-term moving average, pushed to the top side. We've stalled a bit at 2650. And that's pretty much where we find ourselves at the moment, is that you can see the current price 2645 as I speak. Little bit of jitters having made this breakout, but nothing to suggest it necessarily won't happen. We're not overbought yet, so there's still room to be had to the top side. But there is some quite big resistance coming in at 2700, and if you remember, these lows through here we thought could be significant on a topside move. So watch out for we get a big consolidation breakout, we push higher up to 2750 even, and then maybe we just stall out with a false break, and that could be if there were a scenario where we got a break to the top side 2750 and then we fell back below this resistance again, this would be quite a good, if you like, bearish setup in stock markets. But my assumption is that actually we can hold on. We push to the top side, don't even come back to this, and make another leg up to the top side somehow. So let's see how we respect these old areas of support and resistance. At the moment, we're breaking the resistance, we're holding the support, so it looks quite decent and bullish. This was at the last resistance. We broke this little interim one down here, and we've got the moving averages crossing. Incidentally, this is just the 20-day moving average, and then this is the 50 period moving average on the 4-hour chart. So not the most common indicators, but you can see they're quite indicative of the short-term trend and the more medium-term trend, and we've had that bullish cross. So looking all right in stock markets at the moment. So let's see how we can do at this 26.45 level. I think it's just a brief pause. Maybe we dip into the level again. It wouldn't be a big write-off. I wouldn't be considering this like a false breakout or anything like that. It's just would be a pause before a next leg higher. Okay, that is it. Great. Thank you for watching. Really a pleasure to have you here. And if you are enjoying these videos, it's a great help to us to click the like button, subscribe, and you get all the different videos that we're producing notified to you as and when they're released. Thank you, everyone. Have a great week trading.